Brendan Ahern. Brendan, great to have you back on the show. Why are we seeing the reversal in the stock right now?
Well, the company met muted expectations, as well as they really alluded to one of the major headwinds weighing on the company stock, which has been China's zero COVID policy. One of the things that CEO and Chairman Daniel Zhang said was he said that they believe ultimately COVID will pass, and it's going to have a meaningful impact on not only on China's economy, but obviously Alibaba, as a transmission engine for domestic consumption, should be a big beneficiary of this change in policy.
And certainly we've seen names like Alibaba and other Chinese tech, other Chinese ADRs that trade here in the U.S. Bouncing pretty strongly on the expectation that we are going to see a pullback in the zero COVID policy. That being said, do we yet have any kind of idea of how specifically that could play out and what that then is going to mean for these stocks longer term?
Yeah, certainly. We've seen zero COVID policy become dynamic zero COVID. So there's clearly a much higher tolerance. We're seeing, 20,000 cases of zero COVID in China, of COVID in China today alone. So certainly, you have probably some officials kind of padded the numbers before the party Congress, but it's very clear COVID is all over China, and there's a higher tolerance not to have the economy adversely affected. So we're going to see this incremental opening up on the China's economy due to this higher tolerance for COVID in China.
Is that enough to see strength come back, economically speaking, in China in a meaningful way? And I ask that because this is a country that is stimulating the economy right now. We have seen real estate, based on the data we do have and the conversations we do have on this network, seems to be falling off a cliff. There's other signs of softening. So is it enough?
Certainly the zero COVID policy has really weighed on domestic consumption. So that's going to help bring the consumer back. You're also seeing significant policies geared to the real estate sector. And the real estate sector is important to consumption because so much household wealth is in housing. So you're seeing a real policy pivot post-party Congress. It's back to business for the Chinese government, and they're dealing with the big three issues: zero COVID, real estate, and U.S.-China political relations.
Yesterday, Goldman tweeted that a full reopening, while not imminent, could drive a 20% increase in Chinese stocks, according to their research. Does that number sound reasonable to you?
Well, I think the number can be much higher, Carl, just because I think what's really weighed on this sentiment is the issues we've outlined. In addition, is the Holding Foreign Companies Accountable Act. And just yesterday, the PCAOB chair, Williams, she said that they're going to make a decision on the 3 audit reviews that they met with Deloitte & Touche, who's JD.com's auditor. They met with KPMG, who's Yum China's auditor. They met with PwC, who's Alibaba's auditor. And they're going to make a decision on whether or not those 3 companies pass the audit review by the end of this year. And that's going to be a significant catalyst because it allows institutional investors to come back into these names in a real meaningful way.